Preparing for Homeownership, a quick guide to help you plan for your purchase. So buying a home is one of the most important decisions a family can make. It's a serious financial and emotional decision, and it's part of the American dream. The right time, I get this question right now frequently, is it a good time to buy a house? I think I'm going to give you the information tonight that will help you decide if it's the right time for your family to buy a house. That's what's important. What might be the right time for me may not be the right time for you. So we'll go over what it takes, and then we can do some one-on-ones, pop some meetings on our calendars here and talk about you guys individually. So we're going to review the 3 most important factors in determining buying power. And so for us, in order to get a mortgage, whoops, you guys lost me there for a second. Sorry, my co-pilot just logged in and tried to take over. For us, it's credit, debt to income, and assets. So when it comes to credit, we've got to talk about credit score, credit history. Debt to income is your capacity. How much home can you afford to purchase? And then, of course, what does it cost to buy a house these days? Assets and savings. What do we need? How much cash? And where can it come from? We're going to cover that tonight. First thing is credit reports and credit requirements. I've got my question here on this page because a few of you sent in questions in advance with your registration, and that was great. I really appreciate that. And some of those questions, the most important one I got was, what kind of credit score do you need these days to buy a house? We actually do loans with credit scores as low as 580. Ideally, if you want to take advantage of more programs, including down payment assistance, you've got a credit score of 640 or above. That's kind of the sweet spot. At 640, we can do FHA loans easily with down payment assistance. If you want to do a conventional loan, probably going to recommend conventional when you get closer to 700. If you have no idea what I'm talking about when it comes to loan types, don't worry, because we're going to cover that too. But just answering the credit report question, a sweet spot for a home buyer is around 640, although we do go lower. Everyone has 3 credit scores. If you are concerned about something on your credit, we can do a soft credit pull, so it doesn't show as an inquiry. Mortgage interest rates, the rate you get, so the payment you pay, is really based on credit score and down payment primarily, although there are some other factors. So looking at credit, knowing your score is super important. Everybody's credit score on the loan is analyzed. So I couldn't do a loan in my name because I've got the great credit, but I have no income. I want to use my spouse's income. Anybody who's trying to qualify and buy, we have to take a look at their credit score. Credit's pulled one time typically and good for 4 months. We try to minimize the credit inquiries by doing the soft credit pull. If you've already been approved by another lender and they did a hard credit pull, the Consumer Financial Protection Bureau wants consumers to be able to shop for mortgages. So you actually could have inquiries by a mortgage company all within the same 2 to 4 week period, and it will only count as 1 inquiry. They don't want to discourage shopping. So just know if you've got a concern like that, you want to get a second opinion, but you don't want your credit pulled again, there's definitely ways around that. Applying for credit has a varying impact on people's credit scores, depends on where you are, what kind of credit you have to start with. I already mentioned we do scores down to 580. Most loans require 620. You're going to have more options if you're 640 or higher. Importance of your credit score. I'm going to send this presentation to each of you when we're done, along with the coupon that I promised. This just gives you a rough idea what makes up your credit score. Obviously, I'm going to try to use my pointer here. Payment history is 35%. The amount you owe on your credit cards and your revolving debt, that's about 30% of your score. So if I pull your credit and it's not where it needs to be, I have some reports I can run, and I can make some suggestions that come directly from the national credit bureaus on how to improve your credit score. And often it's paying down your revolving debt. So if you're concerned about credit, you can schedule a one-on-one, do one of those soft pulls, see what it is that's keeping your score down, get some help from the national credit bureaus. I can share those reports with you. They're kind of fun to go over together, and make some suggestions. In extreme cases, if you've just had a rough spot and it's recent, you had a bunch of late payments last summer because you were sick and couldn't work for 8 weeks, it could just be time that you need. But I'd like to share that, it's primarily for most of the people we chat with, we have some things we need to pay off, and then typically the score goes up. Again, how to improve your score. We like to use reports from the National Credit Bureaus, but in general, if you pay your bills on time and don't miss your payments, keep your balances as low as possible. There's definitely some strategies with credit cards. Try not to ever charge more than 50% of what the high credit is. Keeping it below 30% of the high credit will bump your score up a little bit. And then, of course, pay off debt. Don't move it around. Don't transfer balances. And don't close accounts that have a good history. Once you close them, they're deleted. Debt ratio. Again, not something we're going to go over in great detail tonight. I want to try to stick to our timeline. But debt ratio, in a nutshell, means we have to take a look at your gross income before taxes. That's what we use to qualify. And so income is, your salary from work. It might be child support if you receive it. It might be alimony. It might be disability pay, Social Security, pensions. Those are all forms of income, and there's many more. But we take your gross income, and the first thing we look at, let's let someone in here. The first thing we look at is your house payment divided by your gross income. House payment divided by gross income is your housing ratio. And ideally, that's going to be around 30% of your gross income. And then your total debt ratio would be your house payment, your future house payment that we're trying to set up, plus all of your debts divided by your gross income. And typically you can't spend more than 45 to 50% of your gross income on your house payment and your debts combined. And this is where a lot of people say, I've got student loans, they're not in repayment right now. We do count something because eventually you will pay them. And so student loans have been a little thorn in people's side because it impacts the debt ratio. You might not be paying on them, but unfortunately, they're counted in the debt ratio. So this is something we do with you individually to make sure that we are keeping you within your qualifying, your capacity, keeping you within your debt ratio. We'll go over this in more detail on a one-on-one call. Liabilities would be your credit card, your car loans, your student loans, furniture loans, recreation loans, anything that shows on your credit report, guys. And then if you pay alimony or child support, that's a liability too. And of course, any houses you own. Your current rent is not a liability because you will not continue to pay it if you buy a house. This was another question that came in frequently from this group. How much does it cost? What are the closing costs? So we're going to go over that as well. So assets, I give you a quick example here. And this is if you're getting no help from down payment assistance, no help from the seller. We've been in a bit of a seller's market. And what that means is when you're making offers, there's not a lot of houses for sale. So sellers are in control. They're getting multiple offers on their house. And they're taking cash offers first, and then maybe looking at the pre-approvals and trying to decide who they think has the strongest offer. And they're really not having to help pay buyers' closing costs. We might see that come back again at the end of the year, but right now we're not seeing too much of that. So if you had to afford, take a look with me here under save enough funds to cover the down payment and closing costs. If you had to afford a $300,000 house on your own as a first-time buyer, down payments are from 0 to 20%. You do not need 20% to purchase a home. I know a lot of family and friends will tell you that, but that's simply not true. The average down payment for a first-time buyer is 3 to 5%. And if you did, in this example, a 3% down payment on a $300,000 home, well, the down payment's around $9,000. Closing costs and insurance and taxes, which we call prepaids, are about 2 to 5% of the sales price, depending on the loan, the sales price amount. So I took 300,000 times 3%. So you have another 9,000 due in closing costs, insurance, and taxes at closing. So without any assistance from the seller, without any down payment assistance from the state or the county, it takes about $18,000 to buy a $300,000 house. So that's super important to know. If the seller does not assist you with any of your closing costs, here are the sources you can use for your down payment. Your savings and checking, tax refund, gift from family, sale of an existing home, 401k loan or withdrawal, down payment assistance programs. Those are the acceptable sources. We can't use any cash saved at home or money that you cash advance off a credit card, just so you guys know. And remember, the seller can pay your closing costs. So they can pay your closing costs and your prepaid taxes and insurance. But a buyer has to pay their own down payment. Again, with a gift, savings, tax refund. So the contribution from the seller, if we're lucky enough to get one, can only help pay the closing costs. So how can we
Vicki?
Yes, go ahead.
Sorry, can I ask a question? So I'm sorry if there's background noise. So you mentioned that this is a seller's market and that they're getting multiple offers on their house. And
Yes.
so with that, why would a seller want to help? If they, like, I think it seems like that's like if they want to get rid of their house.
You know what? It's a great question. Thank you, Casey, for asking that. You know, where I am sitting right now in Seminole County, Florida, it's definitely a seller's market. I have some buyers that are looking in the outskirts of Orlando. I actually have one closing next week in Leesburg, and the seller paid closing costs in Lake County. I have another one in, I think it's DeLand or DeBary. I always get the two mixed up. So that's Volusia County. It's a dated home. It needs a lot of cosmetic work. Seller paid closing costs. So it just depends on where you're looking. The hottest neighborhoods, the best school systems, a house that's been a flip recently and everything's brand new, open floor plan, new roof, you're probably going to have a lot of competition for. But there's still a chance a seller would pay your closing costs. And again, the market changes. As interest rates come down, we may see more houses on the market because sellers, they need some place to go to. So, and a lot of them don't want to sell unless they, because of their low interest rates. So did that answer your question better?
Yeah, thank you.
No problem at all. It was a great question. So one of the hottest programs out there right now is Hometown Heroes. And it's a state of Florida down payment assistance. You need a 640 credit score. Most down payment assistance require this. This program earlier this year, from January through June, you had to be working in a specific occupation. That's no longer the case. This is now open to all first-time homebuyers, if you look on the right here, that work full-time for a Florida company, brick and mortar location. They work for 35 hours a week, and they're first-time homebuyers. It has very generous income limits. Most down payment assistance programs have a cap. If you make any more than the cap, then you don't qualify. For this one, for most counties in the surrounding area, it's $131,700. So anyone qualifying for the loan, if their gross income before taxes in Orange and Seminole, and I believe Lake as well, is under $131,700, then they qualify for the program. As long as they're a full-time employee, working 35 hours a week, brick and mortar location in Florida, and they're a first-time home buyer. There's even some exceptions, guys. When it says brick and mortar, you can work for Amazon and report, they're not based out of, Amazon corporate is not in Florida, but they have warehouses in Florida. So if you report to that warehouse for work, that qualifies. And first-time home buyer, if you're, obviously haven't owned a house in the past three years, you're a first-time buyer, but there are situations where they will make exceptions. I had one today, a client's mother passed away in December and she inherited her mom's house. She has never lived there, does not live there right now. Actually, another family member's living there. We're counting her as a first-time home buyer under the program. I have another situation where because of a divorce, husband had to vacate the house, wife got the house, husband is a displaced homeowner, and Hometown Heroes is allowing him to purchase. So this is a flexible program. Again, questions would be better for the one-on-one, but this is probably our most popular down payment assistance program right now for two reasons. It'll give you up to 5% of your loan amount. So on that 300,000 scenario we ran earlier, close to $15,000. It would basically cover your down payment and leave you just to pay your closing costs. So someone with savings between like $7,000 and $9,000, we could probably make it work using this program. The fact that it is all done in-house for us, we don't have to ship the loan off anywhere before closing, so it's done quick. And then the generous income limits make this a really popular program. And I'm sure there'll be some questions after the presentation. So let's do a quick comparison of buy versus rent, because a lot of you want to know, is it a good time to buy? And although I'm a salesperson, I have the heart of a teacher. I was an underwriter for many years. I've been in the mortgage business 35 years this year. I was an underwriter for about 10 of those. So I'm the one who stamped everything for approval. And I really like clients to be educated and comfortable with their payment. So let's talk a little bit about buying versus renting. I looked up some stats in Orlando. This is for a less than 1,000 square foot apartment, and the average rent is close to $2,000.
Exactly.
Isn't that crazy? So let's do a quick comparison. I have some really fun tools, and I've shown a few of you these already, but this takes a quick look at someone who pays $2,000 a month in rent. And I'm comparing it. Here's the rent column. Rent in 9 years is estimated in that same scenario at over $3 grand. And rent is represented on this chart in purple because rent typically goes up. I mean, how many of you have experienced your rent increase in the past 2 years? I'm sure many of you. But let's look at if you purchased a house. And in this scenario, I'm going to show you real quick. This is based on a $281,000 house. And for $281,000, you're going to get a lot more than 950 square feet. So the payment is higher. I did this with 3% down, and the payment was closer to $2,400 a month. But again, you're probably getting 3 times, 2 or 3 times the house size, and you are bumping up your rent a little bit, but your mortgage payment's not going to change. And what's going to happen at the same time, look at this appreciation gain. In 9 years, that house that you bought for $281,000 could be, based on average appreciation of 4% per year, could be worth as much as $400,000. So that appreciation is not guaranteed, but there's a little saying we like to use. Time in the market is better than trying to time the market. Everyone's like, is it a good time to buy? Is it a good time to buy? All I know is that even I've survived the dips. I owned a house in 2006, 7, and 8 when the market crashed, and I still own that house. And it's still worth more than I bought it for. And I've owned 7 properties in my lifetime. I still own 4. And every single one of them I have made money on. They have appreciated long term. Were there years they were worth less? Yes. But most of us are not going to own a house for a year or 2. So just like to show this. Because again, owning, you're potentially building wealth with that appreciation, even though it may adjust a little bit, just like our 401ks do. So quickly, again, I'm watching our time. How do I get pre-approved and check my buying power? Here's a list of things that we do during the pre-approval. And when I send this presentation, you can take a closer look. But the reality is the pre-approval, it's a consultation. We talk on the phone. We talk about you. We're going to talk about your questions, about where you've worked and lived in the past 2 years. How much do you have saved so far? Where's it going to come from? What are you paying now? What do you want to pay in the future? And then we figure out if you've got the buying power based on your down payment and your income to make that work. That is a pre-approval. We do collect documents when you get pre-approved. It's not a good pre-approval unless you guys do your part and share the documents. I've got to be able to verify that everything you told me over the phone is correct. I don't want to send you out shopping and have you sign a contract for a house that you want to buy without having checked your pay stubs, your bank statements, your W-2s. We don't always need tax returns, by the way. So I see a little question. Julie, I'm sorry if I missed this earlier, but does the pre-approval run a hard credit score? We can actually, I mentioned earlier, we can actually do soft credit pulls now and still issue a pre-approval. A soft credit pull is like what a utility company does. It doesn't count as an inquiry. Gives us a messier credit report. It's not super clean, but it is about 97% accurate. I think I was told this past week. We've been using them since March. And it also gives you guys as consumers time to opt out of prepaid credit offers. So we do the soft credit pull, we get the credit score. It doesn't impact your credit score. It doesn't count as a hard inquiry. And then what we do in the interim while you're shopping for homes is we have you go to like the Federal Trade Commission. There's several sites, the do not call list, so that when we do that hard credit pull, you don't end up with all the unnecessary text and phone calls of people trying to solicit you. So yes, we do soft credit pulls, and yes, you can get pre-approved with one. Here's what the process looks like. there's an initial consultation. This is our phone call and you guys uploading docs securely to our website. Step 2 is we issue that pre-approval to you and your realtor. You get a letter saying you're pre-approved. You get a written estimate, so you have a feel for what a payment and cash to close looks like. And then in addition to that, I begin working as a team with you and your realtor. Every time you go out and you find a house you like, I can update the estimate. I can update the pre-approval. It's how we stay in touch. So we work as a team and we help you make your offers. I want you to know your numbers before you make an offer. And then the other thing we do is when we make an offer right now, it's so competitive. I call the listing agent and the seller and I tell them how great you are and that you've taken all the proper steps. So once you go get a sales contract accepted, the seller's accepted your offer, we do a formal application for the house following the contract. We send everything into processing. We get underwritten and approved. If there's any conditions to clear up, including appraisal conditions. And then the title company helps us transfer the ownership to you at closing. So that's the simple version, a little oversimplification there. Most common loan options. And again, until we know enough about you, it's hard to suggest one of these. We're going to decide what loan option is best for you once we have all your information, because it's, determined by your credit score and your buying power and where your money's coming from. All of that is key. But we do conventional loans, FHA, VA, and USDA. And this is where we get our 0 to 20% down options. And of course, you're welcome to put down more, but we do have a wide variety of options. So just a little funny for you. And, this happens to me about every weekend. On a Saturday morning, one of my agents will call me who's sitting in an open house and someone will come by and say, oh my gosh, I love it. We were out getting coffee. We saw the sign. We didn't even think we were going to be interested in buying a house. We had no intention of moving until we drove past this house and we came in and now we want to buy a house. So, and it just never fails. Sometimes we just can't act quick enough. I want to buy a house. I have no idea what my budget is. I want to go look at houses. That house sold before I could get my offer in. And it's because they weren't pre-approved. So I can't encourage you enough. Get pre-approved first so you know your buying power. You don't want to walk into a house without knowing your buying power. What if you walk into a $500,000 house, but you're approved for a $400,000 house? It will, once you've walked into a more expensive home, it's really hard to fall in love with something less expensive. Plus, if you call me and again, you want to make an offer on a $500,000 house, but you want a $2,000 a month payment, there's no way to make those two meet without a giant down payment. So it's hard for me to help you when all I'm doing is running numbers. So I want to get you pre-approved. I want to prepare you. I want to make sure you look in the right price point. I want to make sure you've got the buying power for that price point. I want to talk to you and your realtor about what we need to make happen. What kind of house do we need? What kind of offer are we making? How much are we putting down? Can we try to get some help from the seller? It is a real team effort, guys. So just a couple things, what you should look for in a lender. Experience, make sure they close on time. Rates and products are important. Obviously, you want to be competitive and have a lot of loans, options, and a variety. Getting pre-approved. Are they using the latest technology? Is it easy? Can you upload docs securely? You certainly can with us. We're super accessible. Most of our offers are made nights and weekends. We've already got you pre-approved. Crunching, adjusting some numbers for you to get an offer in is easy as long as you're already pre-approved. And then just communication, education is key. We're always working for the referral. I'm going to make sure you know exactly what each step is and talk you all the way through from pre-approval to closing. So this is my Instagram, Vicki Knows Mortgages. I post a lot of current information there if you guys want to follow me. I am going to stop sharing and then take a look at our questions, and you guys can always unmute yourself and ask me the live questions. Let's see if we missed anything. Perfect.
Hey, Vicki.
Hey, Dorothy, nice to meet you. Nice to see you. What question do you have for me?
So I am in the midst of needing to switch cars. And so for me, it's more like, I don't know, like right now, for example, I'll need a minivan, and a used minivan of 2013 is like, running for 20,000. If it has like 25,000 miles, this one. And then leasing, it's like, okay, I get a brand new one, blah, blah, blah. But I feel like at the end of that 3 years, usually they're not worth $20,000, they're worth less. And so it made me think that it would be a better deal paying, if I had to pay, $18,000 to buy a 3-year-old van versus $20,000 for a 10-year-old van. But then it's a Honda, so it goes far. So it's very confusing. Like, what's the best? I guess there's a decision I would make if I wasn't thinking of buying a house, but I think it's changing my mind if I am buying a house. Like, I prefer.
I think the most important thing there is not so much buy or lease. That's more of a personal decision. Most of my clients buy versus lease. I'll just answer that. But we need to take a look at the payment and see how it impacts your buying power. If one has a significantly lower payment and you need that lower payment in order to still purchase, that's what's important. So we should take a look at where you are now, and then we can hypothetically insert a car payment and see how it impacts your buying power. We can do that for anyone. So if you're changing jobs, if there's a debt that you're going to have to pick up in the next couple of months, like a car, that's such a common question. I'm glad you brought it up. We can take a look at what's on your soft credit now, and then we can hypothetically make changes to your debts. Even if you're about to go through a job change, we can do that too, and let you know how it impacts your buying power. Did that answer your question?
Yes, thank you.
Oh, of course, it's a great one. Who else has questions? You guys had some great questions in advance, and I hope I answered them in our presentation. Suzanne, I see your hand up. Let me go take a look. I'm so sorry you're muted. All right, I think I've hit everyone.
Oh, I have a quick question. Oh, it's Jenna.
Hi, Jenna.
Hi, I have a question about the Hometown Heroes. So is the Hometown Heroes, will that be like a permanent program, or is that for a period, like say for the next 2 years, or is there have they said how long they'll actually offer the program? Like, I'm even thinking about that for myself, but I'm thinking, and for my clients, of course, like the one that I have right now, but I just wondered if it's just for a time period.
No, that's a great question. So the Hometown Heroes is that down payment assistance program I used as an example in tonight's webinar. There are others, but that's by far the most popular. So that program was actually, it's about 18 months old. And the governor funded it with $100 million in June of last year. And it took us a year to use all of that. Because keep in mind, Hometown Heroes doesn't fund your loan, we do. It funds 5% of your loan to use towards down payment and closing costs. So it lasted, that $100 million lasted about a year. But that program, when it first came out, was only available to 50 particular occupations. The one that's being funded this weekend with $100 million, it's now open to all Florida home buyers that meet, first-time buyers that meet that criteria I mentioned. So we expect it to run out pretty quickly within the next 4 months or so, but don't panic. And here's why. It's a great question. There's already been a commitment by the state of Florida. They're going to replenish it again. So there's sometimes these gaps of a few weeks where they run out of funds, but it is something they expect to fund again. And it's a program that's meant to be self-sustaining. Because that program, let's just say you got $15,000 from Hometown Heroes to buy your first house. When you sell your house, you actually pay that $15,000 back. That's how that program is set up. So it's your money to keep as long as you own the house and you live in the house. If you sell the house, if you refinance it, or if you move out and try to count it as a rental, you're supposed to pay back your down payment assistance. And the idea is most first-time home buyers live in a house 5 to 7 years, and then they move on to something bigger. That's just been the reality of Florida. So the idea is when our first group of first-time home buyers 5 years from now sell their homes, then that money is replenishing Hometown Heroes, and the next first-time home buyer can use it. So
makes a lot of sense. It's a great program.
It'll eventually pick up steam and be self-sustaining. Now, I know I mentioned you have to pay it back. You only have to pay that down payment assistance back when you sell your home. It's meant to be paid back with the appreciation. There is no payment during the time you own the house for using that money. There's no additional payment. It's what
whoever came up with that program was genius. It's really good. It's
used in a lot of other states. So
it is. Okay.
A great question. Yep. So Hometown Heroes, it's a program that does run out of money sometimes, but it's usually only a gap of a few weeks.
Okay. Well, thank you so much for explaining that. And then I can explain that better to my customers.
I'll make sure there's a flyer out on social media this week.
Oh, okay. All right. Well, great. Thanks so much, Vicki.
You're welcome. Melody, I see your hand, but I want to go back to Suzanne. Suzanne, can you unmute yourself and I'll make sure we get your question?
I was only letting you know that I was here. I don't have any questions. I'll email you if I
Thank
do.
you. I'm so glad
Sorry,
that you're
I'm
here.
working,
Thanks.
so.
Nope, thanks for joining us. All right, Miss Melody, what do you have?
Hi. So my question, one, it's cool to see you in real life after talking to you on the phone so many
I
times.
know, yes.
It's so weird. But mine was more about timing because there's so much, it feels like there's so much that has to happen between the time you first start talking to you and
Okay,
then maybe at some point you get to close on a house. So I'm in that scary part where we're putting in an offer and I don't know what's going to happen.
yes, very exciting.
Yeah. So I know, there's inspections and there's appraisals, and how long does that whole process usually take?
That's a great question. I bet a lot of other people have it too. So we get pre-approved when you think this conversation we're having tonight, I tried to tell all of you and your realtors and the people that referred you, if you're within a year of buying, let's at least have a phone conversation, and you're welcome to come in too, or a Zoom conversation. Let me help you with your plan in case there's something I can suggest that might take a little time, like working on credit, how much to save, things like that. When you are ready to get pre-approved, share all your documents and do the more detailed conversation. That's usually when you're within 4 to 6 months of buying, because our credit reports are good for about 4 months. They can still be easily updated. The actual time frame from the time you make an offer on your first home and it's accepted, most of the contracts are written to close. So if my house was for sale and Melody was offering on my house and I accepted her offer, typically most homes close within 30 to 45 days of the offer being accepted. And so that's something I go over in my pre-approval consultations. That's why it's so important to get your documents in, and we have to make sure you've got your cash ready. And if you don't, can you get it ready fast enough for a 30-day closing? The reason it takes 30 to 45 days, even though you've already gotten pre-approved, is because there are a lot of steps to go through. So once the contract is accepted, the first week is pretty busy. The number one thing the buyer is working on is the home inspection. When you get an offer accepted, the next step is to hire a home inspector and to check the major systems of the house. Make sure this house is in good enough shape that you want to proceed. The other thing you do that first week is there's a deposit that's made on the contract, kind of a good faith deposit. It's nothing additional owed. You just put a little money towards what you're expecting to owe. You put that on hold at the title company so the seller knows that you're serious. You make loan application with us for that specific property. Your pre-approval is generic. Now we're making a loan application for 123 Main Street or whatever house you purchased, and we're using the terms in the contract to firm everything up. And then your loan goes into process. So everything I collected that I reviewed is reviewed at a different level. And there's usually one more needs list before we get fully approved. Also going on at the same time, we're going to order an appraisal on the property. It's our collateral for a loan. We want to make sure it's worth what you offered to pay for it. And then the title company's job behind the scene, they make sure that the seller can transfer title to you as the buyer without you inheriting any of their debts. Can they legally transfer the property? So they look to make sure any debts, if I'm the seller, so they look to make sure what I'm selling it for is enough for them to pay off my current mortgage so that Melody doesn't have to worry about my mortgage that's currently a lien against the house. And they look for other liens. What if I had a tax lien? What if I had been sued by someone and they put a lien against my house? That's what the title company does. They make sure I can sell my house to Melody. And the title company is also responsible for holding everybody's money, helping you sign all that stack of paperwork at the end, and then getting everything recorded in public record so that legally Melody becomes the owner of my house when we go to closing. And they actually, app title is usually where you get your keys as well. So in a nutshell, that is the process. And it's in the PowerPoint broken down a little bit. I went over it pretty quickly. There's that one screen, the lending process. So I'll make sure I send this out to everyone.
Awesome. Thank you.
I know that was a long answer, but there's a lot to the process. That's why it takes 30 to 45 days. Perfect. You guys have had great questions. Anything else?
I have a question. I heard you say that if I haven't bought a home in 3 years, I'm a first-time home buyer. Is that true?
That is true. If you have not purchased a home in the past 3 years or lived in a home that you own in the past 3 years, then you can be considered a first-time home buyer. So if anybody's on the call and they've owned a house in the past, or their parents put them on their deed, or if you went through a divorce and you had to vacate the house, let's make sure we have a one-on-one, and we'll go over your scenario and see if you qualify as a first-time home buyer.
Okay, thank you.
You're very welcome. Good question. That's why I love these classes. You guys always have the best questions. And if you have a question, somebody else is probably thinking it. I can hang around as long as you need me. Please don't be afraid to ask a question.
I have another one.
Go for it.
So what if I don't qualify as a first-time home buyer? How do I get help? Like, do I still have to pay 20%? Because I heard that somebody say that it's only 10% or something like that, but I don't know.
No, I'm really glad you asked that, because it's hard to cover everything, right, in 20 or 30 minutes. So what's important to know is that first-time homebuyers are eligible for certain programs with 0 to 3% down. If you are not a first-time homebuyer, you can purchase a house with 3.5 to 5% down. So you still don't need your 20%.
That's good news. Thank you so much.
No problem. No problem at all. So, anyone else have a question? If you do, chime in or raise your hand. When we are done tonight, I'm going to send everyone an email, and I'll include the PowerPoint presentation. I will include your coupon for $250 off your closing costs if you do buy a house with Synergy in the next year. And then I'll stay in touch. If anyone, I'll make sure you have my contact information. The email will actually have a link to my calendar. So if anyone had a question they didn't want to ask tonight in front of the group, or they would just like to get together by phone and chat a little bit, you can click on the calendar link, schedule some time with me this week or next week. I'd be happy to help. All of my consultations are free.
Thank you so much, Vicki.
Oh my gosh, you guys are so welcome. I'm going to wrap this up for all of us. I encourage you to, reach out with questions. There are no silly questions. I love to hear from you. Use the calendar link. Hold on to your coupon in case you buy a house in the next year. And I hope to talk to you guys soon.
Thanks, Vicki.
You're very
Thank
welcome.
you.
You're very
Thank
welcome,
you.
guys. Thanks for joining us. Have a great night.
You too. Bye.
Bye.
Thanks, Vicki.
You're welcome, Jenna.
Bye.
Bye, guys.